Welcome to Texas Capital Live. We're live from Dallas, Texas. I'm Steve Kennard, the president of the AI Innovation Association. I'm joined by my co-host Lee Bratcher, president of the Texas Blockchain Council. And we also have our entrepreneur in residence, JBA, is our producer today. And as we head into this holiday season, the market kind of continues this bearish trend kind of down across the board. Not a big move today. Bitcoin also struggling to kind of find a path forward in the upper 80s right now. And really the story of the year, frankly, has been gold as kind of the safe asset, still around all-time highs at $4,300 an ounce, more or less. But today we want to start talking about something that's a little more illiquid, and that is commercial real estate, and particularly some of the big trends that we're seeing here in Texas. So many companies moving here, all the excitement around the Texas Stock Exchange, and a lot of cranes that you see all around town. We thought it would be really fun to have a good friend of the show, Billy Gannon, join us, who is Senior Managing Director at Transwestern and has worked a ton in this market, and I think can bring a really useful perspective. So do we have Billy ready to join us?
We do, yeah.
I think he's in the queue. There he is. Mr. Gannon, thanks for joining us.
Good morning, good sir.
Oh.
Billy, you might be muted.
It might be the old mute.
No,
it might be on our end.
Huh? What's your audio set to on?
Stand by, folks. We've got Billy on. He's gonna some technical difficulties here.
Yeah. Here, we'll bring them back in just a moment. Y'all continue with data centers?
Billy, we'll bring you back in about 5 minutes. The issue is on our end. We're going to continue with the data center conversation here. Steve, what do you got for us this morning?
So there's been a lot of hubbub lately around data centers in space. This kind of started a few months ago, I think more as a joke. I personally viewed it with a great amount of skepticism, and I don't think I'm alone in that. What I wanted to share was some of the discussion that's been going around lately, because it's kind of started to make me think, well, maybe this isn't so crazy, and we got to start contemplating, where could technology go in future years? And I wanted to read a little bit from a post that an investor focused on AI, Gavin Baker, had made, kind of laughing about this. He says, deeply amused by all the confident commentary that data centers in space do not work from a physics and engineering perspective. He goes on to highlight that people have kind of always said this about technology, and then it goes on to, exceed all expectations and do whatever was impossible before. I think the really interesting part of what he says is, and I quote, there might have even been more than just a pencil and paper analysis of the subject done by some of the best engineers in the world. Perhaps they have thought of a cooling solution that has not occurred to the Galaxy Brain accounts here on X, even after they took several minutes to carefully think about the problem. He says, if you are not currently operating a large AI data center, a large satellite cluster, and have not landed a rocket, maybe it'd be good to be a little less confidently in terms of assuming that Elon and Google are both wrong on the topic of data centers in space. And then Elon Musk comments below, fools are determined to be fools. Trying to stop them from being so is futile. So he's obviously taking a very clear position on this. What jumped out at me, Lee, we just know from all the data centers being built here in Texas that one of the biggest hurdles and costs is the cooling side of that equation. Mm-hmm. And so this is I think the big discussion that's going on here is solar energy provides so much more energy, and in space, the cooling side of the equation is basically solved. So all of a sudden, the huge technical hurdles and enormous cost of launching and all of that kind of becomes shifted in that equation. And when you have someone like Elon Musk and also Google investing aggressively in this, all of a sudden it seems like maybe this isn't so far-fetched after all. Now, the timeline that Google, its CEO, gave was something more like 10 years. So I'm not about to say, oh yeah, we're going to be doing this next year. Is that the thing that's driving all of the rumors around SpaceX wanting to IPO? I don't think so. I think they have a core business that they need to fund. All of that being said, though, I'm moving off of the sort of, I just laugh this off as ridiculous, which is maybe where I was a few months ago. And all of a sudden, I'm like, I think we should probably start to really have this discussion and not just, as Gavin Baker points out here, don't just laugh something out when you have some of like the biggest investors and brightest entrepreneurs in the world saying, no, we're going to do this and it needs to be done to get to the scale that the AI industry eventually needs?
It's going to happen eventually. I mean, if you look at the cost of solar energy going down over time, if you look at the cost of, dollars per kilogram of, getting compute into space, satellites, launch costs, that is going down over time. So if those two things go down for long enough, then you have the cost savings on the cooling, like you mentioned, by just rotating that data center so that the sun, continuously warms or cools it. Right. If it's too hot, then you rotate it away from the sun. If it's too cold, then you rotate it toward the sun, and that can all be done with relatively little energy. So it does. The physics of it makes sense. It just it doesn't make economic sense today, but a lot of things don't make economic sense today that people are pouring billions of dollars in. So
there's so many things you could have said just a few years ago. That'll never happen. And then here we are.
We are. Well, it looks like we've got our audio issues fixed, and Billy Gannon is back with us. Billy, sorry about that. We've got you to talk a little bit about the Dallas real estate market. Tell us what you are seeing from your vantage point.
Perfect. Can you hear me now?
We
Yes,
sure
sir.
can.
We're live.
Excellent. Appreciate y'all having me on today. Love hearing kind of, what y'all are seeing from an energy standpoint and then what I can bring in from a real estate standpoint. Little background on me. I'm a Dallas native, 7th generation Texas, have been in commercial real estate for the last 19 years. So the bulk of my career has been doing office tenant rep, but then also of late, called the last 5 to 7 years, helping out in the industrial sector. And so primarily my business is DFW focused, Texas, and there's a couple of clients that take me around the US, but it will hopefully be a good kind of cross section for just kind of commercial real estate in general. And I think what we're seeing is one, we're lucky to be in DFW.
Yeah.
So, over the last, over the last 15 to 20 years, you've seen a migration of companies and people move here, and that got accelerated during 2020. So Texas led the nation in job growth, corporate relocations, and people moving here. And I think it's as simple that people and capital are going to flow to where they're best treated. And so Texas, Florida, Tennessee, I mean, if you look back at the U-Haul stats, those are the top 3 locations over the last 5 years. And I don't see that trend changing anytime soon.
Billy, tell us a little bit about the finance industry in DFW. I don't know if you can share, some of these might be trade secrets, but where are we seeing this kind of Y'all Street materialize in sort of that north, or I call it midtown, uptown Dallas area, maybe even downtown? What are your thoughts on all that?
No, it's one of those things. It's sort of very clever marketing. It started off as a meme of Y'all Street that has now materialized into real life, and it's actually happening. So some high-level figures for your viewers out there in your audience. JP Morgan has more finance workers in North Texas than they do in Manhattan.
Yep.
Goldman Sachs is building their HQ2 right next to my building that will deliver at the end of next year, that will house eventually 10,000 employees. And my quick prediction on Goldman Sachs, I think they'll do something similar that we've seen, where somebody will have a hub location in greater uptown, and then they'll do a spoke location potentially up north in Legacy, Frisco, Plano area. So I would not be surprised by that. Other information, Morgan Stanley is currently in the market for 800,000 square feet.
Wow.
Wells Fargo did 2 towers over in Las Colinas, and now they have plans for a 3rd tower. So you're seeing Texas, and specifically call it DFW, sort of becoming the new home of finance. And I think we're in a good position with the Texas Stock Exchange and all the other kind of momentum that we have going here. It's a logical location to kind of be the head of kind of central hub for finance.
So, Billy, that was really interesting, kind of household names. I think it's fair to describe those couple that you were putting out there. I'd like to pick your brain as well on what are you seeing in terms of people doing new build stuff that's maybe not like this is the Goldman Sachs building or this is the Wells Fargo building, but maybe just new multi-use kind of in this, as Lee said, this kind of broader Y'all Street development. Like it's not just the New York people coming here, but like maybe a broader development that's going on. How are you seeing that play out?
I'll answer that question. Great question, Steve. I'll answer that kind of twofold. One, the office market in general is sort of bifurcated in that you have the upper end, the class A, class double A. So
Yeah.
this is where you're seeing that it's better located. It's uptown, Preston Center, Legacy Frisco. So you're seeing high-end amenities, walkable food and beverage, nice covered parking, access to nature. Those areas are continuing to see tenant demand, pushing rents, and their occupancy levels are getting, upwards of 90 to 95%.
Hmm.
If you look at the other end of the market, you have Class B, Class C, maybe kind of your mid-tier buildings. They don't have the amenities. They're not well located. Those are the buildings that are struggling to get tenants. They're struggling to get workers back into the office. So it really is a tale of two cities from that standpoint. So Steve, the development that you're talking about and seeing, it has to be in kind of those well-located markets. A little small pocket market that has exploded over the last 5 years is called Knox Henderson.
Yeah.
Yeah.
So you've seen the success that Weir's Plaza has had, and now Michael Dell's family office has been just buying up as much real estate as they can down there. And there's a huge development. And again, that's arguably the most walkable district in Dallas, and you're a stone's throw away from Highland Park, and you've got what is our one of our best natural amenities in the Katy Trail,
Right.
walking and biking.
Well, I didn't know that. That's interesting, and I'm glad to hear a Texan, Michael Dell, investing here. Of course, it's encouraging for the broader development of Dallas as a finance capital to have the Goldman Sachs of the world, but nice to see some more kind of local family office investment as well. We certainly support that.
And what we're talking about here, and what we've talked about quite a bit on this show, maybe rather unintentionally, but it seems to be the theme this week, this quarter even, is hard assets, gold, Bitcoin, real estate, energy in the sense of generation and transformers and distribution is all hard assets. Of course, the electrons themselves are not, but that's a little bit of a turn of phrase. So these are all hard assets. Billy, what are your thoughts kind of from taking your advisor hat off from a real estate perspective, but you're putting your investor hat on? What has drawn you to those kinds of assets over your career?
No. I mean, it looks like you took a sneak peek of my portfolio. I like those assets just because there's a physicality to them. They can't be just magically printed or created out of nothing. It takes real world resources, time, energy, and effort to produce an oil well, to build an office building, to go out and mine gold, and then obviously the computational power that it is to mine Bitcoin. I mean, all of those things require work and effort, and that's where I kind of have gravitated to those assets as far as more of kind of the best store of value to preserve my purchasing power. Because I think, as we all know, we go out and we work day in and day out, and we trade our time and energy for dollars, and those dollars are not storing their purchasing power better than they could be. So you got to quickly convert that into an investment. You've got to move those dollars into assets as quickly as possible to retain your purchasing power. And that's, again, those four, assets that we touched on are, in my opinion, have done well, and I think are going to continue to do well over the next 5 to 10 years.
They were a little bit sleepy kind of in the early 2000s, those, hard assets, utilities, real estate, gold. But, maybe starting after COVID, after sort of that print monetary easing, quantitative easing that took place in the COVID time, those assets have been exploding. I'm sure there's, that's certainly not a coincidence that has took place around the, expansion of the money supply by like a 2x multiple. So you're seeing the next 5 years, that trend continuing then?
That's my thought. I think people are going to want to have, a strong allocation to hard assets. Gold, Bitcoin, real estate. I like energy as well. I think it makes a lot of sense. And for so long, people have been underweight those assets historically over the last, call it 30 or 40 years. So maybe they have a 1% allocation to gold, but it's in GLD. Again, I'm a big believer in owning the physical stuff. I think you bring up the point of potentially counterparty risk, and I would rather just be able to kind of self-custody those type of assets, in my opinion.
And tell us, a little bit about, we've included Bitcoin in this hard asset conversation, and I think the three of us would understand, but some viewers may not. Tell us why Bitcoin is a hard asset.
I think it's almost a two-step process, Lee, in that first people kind of have to understand, in my opinion, why you would want to have gold in your portfolio. And I think that's been, even though gold's been around for 5,000 years as a store of value, historically for the last 50 years, since 1971, most people don't have any allocation to it. So I think just recently people have started to allocate to it. You've seen the large professional financial service firms recommend allocations to it. So I think that's kind of the starting point. Hey, gold tends to perform well in times of inflation, uncertainty, geopolitical risk, but in general, it tends to at least outpace kind of the true cost of living increases, and call it the increases in the into money supply, which historically tends to be 6 to 7%. So I think people have to first grasp that they need to have an allocation to gold. And then at that point, I think they need to start realizing Bitcoin has a lot of the features of gold as far as kind of store value and as money. And then potentially it's even better because of the digital nature that Bitcoin offers, while still having that scarcity that gold offers as well. So again, for a lot of people, it's a steep learning curve. But I think when you have now Jamie Dimon and JP Morgan have kind of done a 180 on Bitcoin. You've seen Larry Fink at BlackRock. That's been their single best performing ETF over the last 18 months. And what I think is fascinating with Harvard being the largest endowment in the world, their single largest position is the BlackRock Bitcoin ETF. To me, when those type of players start allocating to an asset, you really need to have a reason why your percentage or your allocation is zero, and not potentially 1 to 5%.
Yep, that's well said. I appreciate always getting a different kind of explanation around that. Lee and I obviously have spent a lot of time trying to win people over to the cause as well. So that's well done, Billy. I want to ask you for kind of your prediction. So this was kind of, we didn't prep you for the question, but you're mentioning like other Wall Street firms come in, other big corporate people looking. Right now, the kind of prime area has been that uptown, what I think is kind of becoming the Y'all Street between SMU and downtown, let's call it.
Correct.
I'm curious if your outlook is like all the next announcements are all going to be concentrated in this little area, and this is kind of like the winner in Dallas, like you said, like the tale of two cities, or are you seeing, maybe are you willing to like make a prediction? Hey, here's some other big developments or areas that could steal some attention, that could be an up and coming, that have some investment going on. I know there's a lot of different people that are trying to reinvigorate other areas of town, or I'm just curious what might be your outlook on that, or give some perspective.
I'm a big believer in this hub and spoke model. So I think people are going to want to plant a flag in that uptown area.
Yeah.
But I don't think that's going to preclude them from having another office operation elsewhere in the Metroplex. Just because there's great talent that lives close to uptown, but then there's also great talent that lives up Plano, Richardson, Frisco, Allen. And those people, people do want to come back to the office. They're more efficient. They're more productive. Most people enjoy working with their colleagues.
Yeah.
What people don't want is the hour-long commute.
Right.
So if you could offer kind of those uptown amenities, uptown quality assets in kind of your suburban locations that are 15, 20 minutes away from the home, I think those areas will do really, really well. So I think if you could offer Class A plus building up in the suburbs, has the walkable amenities, has access to nature. We're working on a project that would be right next to the third location for the Katy Trail Ice House off 121 in Allen that would offer all of those things. And again, you're stone's throw away from Frisco, McKinney, Allen, Plano. So again, I think those people want those type of uptown amenities, but they don't want the 45-minute hour commute each way.
Yeah, I know that area in Allen, so that'd be interesting. I didn't know there was another Katy Trail Ice House coming. So Billy's got
It's
the
in
inside
March.
info.
I know that's big news. I mean, I've been to obviously the original, and then several times been to the one up north. I guess it's in Plano kind of area. Mobility is key, right? We'll see the driverless taxis. We'll see the air mobility option in the coming years. But I do think you're right. If you can have your hub in Uptown, and maybe you go there like you're an employee at Goldman or somewhere else, an investment bank, and you're at the hub once a week where you stomach that 45-minute commute, but then the rest of the time you're in Allen with a 10-minute commute. That's doable.
Yeah.
That is my thought, because I just think more people are going to continue to move here. I think traffic is going to continue to, hate to say it, probably get worse.
Yeah.
I mean, obviously, hopefully, if you have kind of, whether it's Waymos or self-driving cars, it may be less people off the road. But again, we're still a very car-centric people
Yeah.
in North Texas, that I don't see traffic getting any better in the next 5 years.
Yeah.
So again, I think you need to have close neighborhood office locations. I'm very bullish on that.
Makes a lot of sense. Billy Gannon, thank you for joining us. Managing Director, Transwestern, and just a wealth of knowledge on hard assets, real estate, Dallas, and SMU football.
We're bullish on all of those.
I appreciate it, guys.
Thanks, Billy.
Thank y'all. Bye.
Yeah, the hub and spoke is an interesting concept. It
Yeah.
hasn't historically been the case, but I think J.P. Morgan was the first one to do that at scale, because they have the building downtown, and then their giant campus is up north,
Right.
and Legacy. So they've kind of set that model. So I think Billy's onto something there with that prediction. All right, we want to move on to our Ask the Markets segment, where we look at a couple of the interesting things going on in prediction markets, and in Kalshi, in this case, kind of all kinds of news items floating around. JBA, do we have a couple different interesting things going on in the markets? What can we talk about there?
Yes, indeed, we do. I have a couple different things for you, and one of them is the Fed decision in January. Of course, I know we just got through one, but the world never sleeps, right?
We're already looking at the next one.
Already looking at the next one. So I'm curious about this, because I know we had a massive flip 2 times in the last one, right? I don't know. I wouldn't be surprised, really, at this point, if they did cut rates again. Just seeing, from the last massive flip here. I don't know. I'm curious to get y'all's thought on that.
Well, this is just interesting because you see it was 50-50 not long ago.
Exactly.
So, in recent days, we've had this emergence of, at least in this market, what you might call a consensus. I think above 75% is consensus, is kind of a consensus outcome, that there will be no cut. It's like the next chapter in the tug of war between the administration and Jerome Powell. And like you said, we just finished the last cycle, and this one starts right away. I can't give a good reason for why it kind of starts 50-50 there, and then you've seen a dramatic move. That is part of what makes the prediction markets interesting, is in the sense that they bring a new data point that it doesn't have to move because somebody said this or whatever. It's the market is judging that expectation. It feels like we kind of start this way, and then as the day nears, there's more and more pressure to cut again, and then they cut 25 basis points. So this is not investment advice. I'm not telling you what to do, but it feels to me like, the drama has not ended here, and we're due for another one of these flip flops of the market. And so you wouldn't be surprised to see the blue line on this chart that they would cut 25 basis points, make a run as the day approaches.
Yeah, I don't know. I think one of the reasons for the divergence was, just stable economic data, jobs numbers, and unemployment data that makes folks think, well, the Fed's going to be kind of hawkish and they're not going to cut. At 77% chance of maintaining. That's a tough one. because you're only getting, 25 cents on the dollar if you're betting against, against the house there, or with the house there.
It is quite rare to see something go as far as 77% and then invert and have the other outcome.
Yeah.
Yeah.
This far out too.
Yeah.
Yeah, I'm not sure. It's just one of those things where, at this point, I very little surprises me. I mean, from everything we've seen the past 2 years, it's like, oh well, that can never happen. It's like, well, I think we've been proved wrong on that one before.
Yeah.
There is certainly a lot of political pressure to continue cutting those rates.
That's true.
So,
Well, let's dog on Kalshi a little bit. We typically don't because we're big fans of Kalshi and Polymarket, but hopefully they're listening to this stream, and they will take off all of the questions, all of the markets that they create about, will Trump say this, or will JD Vance say this, or the announcer during the Los Angeles Rams game say that. Literally, the first 4 markets that I'm looking at on their homepage are, will someone say something in some remarks or during a sporting event? That's a bad idea.
it was already absurd, I think, when it was being done for major speeches, say a presidential speech or some address. Okay, that was already absurd. Now we're going into total clown world. If you're betting on what an announcer's going to say on Monday Night Football or something, it's just, how is that not cancerous?
And I love how, to your point, and then they bring the live stream directly into the shot here, or in the page where you actually bid.
Yeah.
So you can watch. So if you go on here, there's a countdown to when this is going to happen, and then you can watch the speech in real time and see if he's going to say China or peace or whatever.
This is nuts. So the actual prediction, we were joking before we started the show, the actual prediction market I'd like to see is how much longer will this persist until it blows up in a ridiculous scandal?
Yeah.
Because some staffer to some elected official was
Speechwriter.
monitoring this.
Yeah.
What are they trying to get JD to say here? JD Vance in his speech?
Peace or China.
I mean, you're creating a very clear incentive for that speechwriter to put peace in there if it's trading at 13%, and you can flip it the other way and call it a 5x plus return.
Exactly.
This is not something I can count.
It's like a doomsday, game of musical chairs, and I'm really interested to see who's the one left holding the bag, because somebody's going to be taken down for it.
And it's so sad because Kalshi and Polymarket, these prediction markets, are providing a very valuable market service, pulling information to making information public that otherwise wouldn't be public, based upon people, indicating with their dollars. They're voting with their feet, if you will. But things like, the one on the very top of Kalshi right now is who will be the first to leave Trump's cabinet. And right now, Kristi Noem has a 28% chance of being the first one to leave, so it seems like she might be the highest. What if Kristi Noem's husband just puts a big bet on that and says, Kristi, why don't you just retire and go into public, into business?
Yeah.
You have a big brand, you'll do great. And by the way, I've got $1 million on the fact that you'll be the first to leave and we're going to 4X that because it's 28% odds.
Little exit bonus there.
Little exit bonus. Literally could have a $4 million. There's enough liquidity on that contract to have a $4 million bonus for her if she leaves.
We don't know Kristi Noem, obviously, but the example's a fair one. And I don't think there's any outcome where this doesn't end in some disaster like this.
No.
It's just, it's gotten too far out of hand. I don't know where you draw the line. And I understand the point that Kalshi and Polymarket make, that we make a market and people create events.
Right.
Okay, but there's some threshold here of what constitutes an event when it is determined by a very malleable decision of a single person. Okay, I'm no advocate of sports betting, but at least when you have multiple people on a team, it can be harder and harder to throw that, even though we see all kinds of corruption around that already. So imagine the hyper corruption that is possible when you have something like this. It's just hard to see this train picking up steam and not say it's going to go off the rails.
I agree. But I'll end my soapbox there, and Steve lets you bring it back to SpaceX. JBA, I think we've got some interesting odds on SpaceX. Steve, take it away.
Yeah, well, this is we were talking about this last week, And the rumor is kind of really taking hold.
Yeah.
And it's a general second half of 2026 that people are expecting this. And so right now you cross the 50% threshold for September in this prediction market. So that's kind of let's call that the over-under that's being put out there. And I think this is such a massive IPO. It has to kind of push towards the holiday season of next year because it's such a big event. I already said in the last episode we did, and I have to reiterate, I am really hoping and encouraging SpaceX. This would be so cool to be the first IPO on the Texas Stock Exchange.
Yeah, it'd be really
I think
cool.
it'd be a banner thing. There's a city here named after SpaceX, basically, in this state. So I think we've earned it, Elon. But it feels like if you're talking about a market cap that they're seeking that's north of $1 trillion, that has never been done except for Saudi Aramco, and that's really a one-off weird thing.
Yeah.
That's just an amazing lift. What a dramatic thing to unfold. Like something, you talk about something we can talk about, every week for the next year.
$1 trillion market
You
cap.
know, by far the biggest IPO in history. And it goes back to what we were talking about with data centers in space. The whole premise of this company was like, at every step, this was impossible. At every step, it can't be done. And they are the only private enterprise. I know Jeff Bezos is trying, but they are the only private enterprise on planet Earth right now that can reliably and economically launch something into space, which is just such a remarkable. How do you value that?
Right.
So what an amazing thing. And then you've got Starlink wrapped into that. Like eventually one of those should spin out, like the straight up space business, and then just Starlink as a retail product. Maybe they're saying, no, that's going to be kind of the consortium that makes this stuff. Like Starlink is a cash flowing thing. And then there's the more aspirational space exploration side, but just what a cool business.
Yeah.
I expect enormous volatility in these prediction markets around when something like that can be done. We would have loved this IPO to happen earlier because it's one of the biggest, like most actively traded private markets.
Yeah.
SpaceX shares. But here we are and rooting for that to actually come through.
I would love to
second half
throw
of
a
the year.
future hypothetical scenario here that kind of comes into the problematic nature of this. I know we previously talked about in the show, what even are financial markets when, they're now partnering with news organizations where you can bet on earnings and stuff. It's like, well, so this is like market squared now. So my question would be, what happens when with SpaceX, being a prolific example, okay, well now you can bet on whether or not they're going to be able to have this launch be successful. Or now you can bet, well, so what is the stock market at this point? And is that tied to or completely separated from the price of the shares once it does go public? I think that's a really, I don't know. We haven't seen anything that direct with companies yet, but I guarantee it's going to happen on Polymarket.
I'll take it another step because it's an interesting mental exercise. Because right now we were looking at that market and it's monthly, right? This is the banner IPO that's ever happened, right? And so as it comes in closer and closer, I'm going to go ahead and make the prediction that it's going to go to a daily market. And you're going to see all this, whiplashing. And then you'll have kind of the controversy, which is I think what you're getting at, JBA, of like, what is the outstanding open interest betting around the day that this IPO occurs, as opposed to like the actual money that this enterprise is trying to raise to build a real going concern. I'm not saying I like or dislike that. It's just this is the world we live in now. And I think that's your question. Like, what is a financial market? The point is that an actual business is supposed to raise up funds to expand that business in the real world. Okay, we agree that this prediction market technology is kind of like, you can't not look at it. It brings a lot of interesting nuance to trying to divine what is reality in the world. Okay, I can get along with all of that. But I think 2026 is the year that like these hard conversations and questions start to get asked of what are we doing here? And when does this cross some line? I don't know the answer, but I think it's coming.
Well, I think that there's a possible scenario that, look, the financial markets we understand today at some point had an origin, and I think that we're seeing the beginning of an origin of a new type of financial system that doesn't exist yet. I think that it's kind of idle to think that, well, the stock market is going to work the exact same way with Web3 and prediction markets. I mean, perhaps at some point this becomes the market. Like,
Yeah.
I don't know. I mean, I don't know exactly what that looks like, but, you know, obviously systems always change. And it seems as though this is, at some point, it's going to be integrated into the markets. I don't see how it doesn't. I mean, if you can bet on, hey, are they going to be able to, you know, are the astronauts actually going to be delivered to the International Space Station? Is this payload going to work? Is it, you know, that, or it's regulated and you can't do that anymore? I don't know. I mean, it seems like you have one of those two outcomes.
Yeah, I think it would be fair, it'd be interesting. Maybe we get a chart put together here, like total open interest for non-sport, because so much of the volume on Kalshi and Polymarket is sports betting, which I put in another category of waste of time. And then there's other stuff that's going on related to the economy. And it would be interesting to graph out the open interest going on there as opposed to market cap of like the existing equity markets. And I think you're going to see the Kalshi and Poly market ramping up. It's coming to some crossover point. Some interesting like Harvard Business Review case study will come out. That's my other prediction. 2026, you'll see one of the business schools do some kind of case study around what is the utility versus the, I don't know, threat to like common decency.
Yeah.
that
Consumer
that these-
protection,
the consumer
integrity
protection
of
angle.
markets.
Yeah. So we'll start to see the professional class, I think, chatter more about it. It wasn't that long ago that this was like cast off into the kind of
The
margins.
degen world.
Okay, that's clearly over because it is very much, coming into the...
I mean, ICE, the parent company of NICE, owns a good bit of Polymarket. I don't remember.
Yeah.
I think they took a 20% stake or something like that.
Yeah.
One thing on the SpaceX IPO, I'd love to see which investment bank gets that deal. Of course, it'll be multiple, I would assume, but that's somebody's deal of a lifetime. Some investment banker somewhere is going to be able to retire on the fact that they landed the SpaceX IPO like primary investment bank relationship.
I'd love to be the fly on the wall for the pitch of like, here's how we structure a valuation model for this and like take it to the public. Maybe you can't even do that. Maybe it's like a Tesla where everyone's like, but it trades at this multiple and that's crazy. And it's like, well, it's not crazy because it's been trading at that multiple for years now.
And the market supports it.
So you can say what you want, but there it is. And it's like a similar thing with SpaceX, but that investment banks multiple are going to really have to earn their weight on that one. It's the, I think, banner business news of 2026 is the SpaceX IPO. But overall, I think it will lead into kind of a big win for American business moment, or certainly that's what I'm hoping for. So
100%. And Steve, you got another segment for us here, the policy update segment.
So we're gonna wrap up with the policy update. I had the opportunity and really the enjoyment yesterday to be in Galveston. Actually, have some family in Galveston, and Governor Abbott was at a function for my friend Terry Leo Wilson, who's the state representative for Galveston. And so I got to see my family. I got to go to this event. And maybe most germane to this show, I got to hear a very interesting speech from the governor around the number one issue going into this next election, which is property taxes. So I want to read the 5 points that the governor has put out. And he's been on a tour kind of galvanizing support. Obviously, to pass a major reform, you're going to need the House, you're going to need the Senate, you're going to need the governor. Mm-hmm. And so he's been on a major tour to galvanize support around these 5 points. So this is the high level. I want to read that. This is Governor Abbott's property tax reform plan. Number 1, require common sense local spending limits. Number 2, require 2/3 voter approval for tax increases. Number 3, empower voters to roll back taxes. Number 4, create appraisal predictability and cap appraisal growth. Number 5, eliminate school property taxes for homeowners. Now, I want to step back and say, first of all, I'm so glad to see this take front and center just as a Texan, because I, like so many and millions of us around the states, am sick and tired of my taxes going up. And so what I'm going to say is the governor touched right on that in his speech last night, that what most people don't appreciate is the primary tax levying entities of property
Are
taxes. That's right, are the municipal and school districts, which are local governments. It's not the state government. And so the very valid and I think useful point the governor made is that the state has, for a number of sessions now, made tax commitment of funds of surpluses to reduce the tax burden
Through the homeowner's exemption to primarily.
by raising the homestead exemption. That's
Homestead,
right, and
yeah.
by what they call compression of the school taxes, which is essentially taking a surplus at the state level and using it to buy down the amount of taxes you have to pay at the local level. Okay, but the problem is that the appraisals have gone up so much that the dollar amount that we as Texans are paying for most people feels like it has gone up very substantially. And so I commend the governor on like coming out and calling out like what is the core issue, okay, and then how are we going to fix it? So the number one on the spending is a very welcome in this age of Doge. You know, Doge has maybe retreated, potentially failed at the federal level. I think we're going to have another shot here in Texas to be a leader and really like let's talk about spending at the local level. The fact is, I think undeniably, the numbers just bear it out. The comptroller can confirm it. The state has run consistent surpluses. Local governments are where you're seeing deficits and a scramble to increase the tax burden. And so that's going to be a big sticking point. Now, how that ends up in the law, you know, a lot of back and forth and fighting to be had there.
Let me play devil's advocate
Go for
with
it.
you, though. A little bit of a unplanned debate here, though. So I agree, you know, all this local spending, especially at the ISD, the school district level, is out of control. The number of pupils is increasing modestly. The number of teachers is increasing at pace, but the number of school administrators has increased over the last 10 years, like 10x the number.
Out of control.
The percentage increase. So school districts have a spending problem, right? And they've got more money, they have higher appraisals, so they just, what do they do with it? They don't give it back. They just hire more people to do things that, you know, other, you know, people were able to do before,
Yeah.
but now they need 5 people to do that same task. So 100%, there is uncontrollable spending at those levels. Now, should we be paying teachers more? 100%. That is also true.
Yep.
Teachers need raises. We need a few less administrators. I'm not saying get rid of administrators. You need administrators. Keep the best ones. Let the other ones find new opportunities.
Yeah.
And use some of that to pay our teachers more. Teachers should be making $100,000 a year, and the best teachers should be making $150,000. I mean, they should be making it some, you know, second or third quartile of the median wage for either that state or that city, for perhaps. So our teachers aren't paid enough. My one qualm with the governor, and if he were to confront me on this, I'd probably use more tactful language and say, Governor, you are probably right on this and defer and everything. But maybe I would stick to my guns and say, these taxes got to come from somewhere.
Mm-hmm.
And if we're lowering property taxes, are we increasing? Okay, take a 10% reduction in, you know, school district spending. Like, let's take that off the table.
Yep.
But after that's off the table, that fat's off the bone. Where are we going to increase sales tax? Because we don't have a state income tax, which I think Texans love, and we're constitutionally banned from having a state income tax.
We're for that.
We're for that. Our sales tax is pretty high. Are we going to increase sales tax? That's a challenge.
Yeah.
I'm not aware of any other mechanism besides sales tax, property tax, and, you know, state income tax to raise tax revenue. Maybe you have some ideas.
Well, so this is a good question. I think this is why the governor is going to be on a campaign trail, because I got to hear it from him last night. And the main point around this is the surpluses that the state has been running. And he was referring to the numbers in the study from the comptroller that the amount of the surplus in the last couple of sessions is sufficient to eliminate the school property taxes for homeowners. I think this is a critical piece that people have said there will be no school taxes whatsoever at the local level. So the focus of this plan is for those on a homestead exemption, which is a subset of the people that form the tax base for a school district taxing entity. That's number one. Number two is in the sense that it is dependent on continued economic growth and a surplus, it is in that way not an elimination in the sense of if there were a recession and there was not a surplus to continue to, to compress the overall tax revenue, a tax burden, I should say.
Yeah, yeah.
Then, in order to avoid, nobody here is advocating. I know the governor would be first to say nobody's advocating we're going to have a situation where the state, where there's a recession and we shut down the schools because there's no direct taxing mechanism to fund the schools.
Right.
And so I think that is the way over the medium and long term that this plan comes together. Is it's kind of based upon the continued economic performance of the state economy without raising the main revenue mechanism for the state, which is the sales tax, as you point out.
Yeah.
And so that is based on, as the governor said, these are the comptroller's numbers. So I expect you'll be hearing more of that, that those surpluses are sufficient. And by the way, some amount of those surpluses in the past have been used for this program and the other, and
Right.
there's all different kinds of things. So inherent to this discussion is a reduction of the list of other things that the surplus is prioritized to be used for. Expect heated floor debate around that in the legislature.
I would say so. I mean, even I'll say when you have the opportunity to end property taxes for homeowners, school property taxes, homeowners being the primary beneficiary of that, sending their kids to schools in that area, then the burden falls on the renters and the investor, but then he or she passes that on to the renters typically.
Right.
So you have the class of folks who are renting, which is not all lower socioeconomic. Some very wealthy people rent; they just choose to do so. Okay. But the renters are taking an outsized share of that tax burden, and they're using the surplus to buy that or to eliminate that for the homeowner. But the surplus is funded by sales tax.
Yeah.
And sales taxes is academically and data driven from all those perspectives is a regressive tax. Mm-hmm. People who make less pay a higher share of their income in sales taxes. And I am not a bleeding heart. I am not a progressive. I know I kind of sound like one right now.
You are kind of sounding like one.
But the amount of pressure that puts on that lower socioeconomic group is going to be substantial.
Well, I think you've hit on the political debate that we're going to have in this next, really the whole campaign season, and then going into the legislative session, because there are these calculations that are going to be made and debated of where if this burden goes down, then the other goes up, and what's the best way to handle that. I think the focus of this is to devote over the long term more or all of surpluses to this priority.
Right.
And that's the core messaging here. And then you're going to have these questions around, well,
but why does it only benefit homeowners? I mean, that's my thought.
And then you get into a tug of war around that. Now, that's inevitable in politics. I will say, I think another interesting part of this equation here in terms of where does the money come from is moving to a 2/3 voter approval for tax increases. Because, and in addition to that, whether or not, as I understand it, bonds are considered a tax increase. And so
that's interesting. Bond election requires 2/3.
That wasn't clearly said in the speech. So I think this is so, you've got the 5 key kind of public components of this. And then step 2 is the debate around, okay, well, let's flesh that out into this full.
That's interesting.
Into this full law. In any event, just as a taxpayer myself, I am consistently outraged at the extremely low turnout for elections that dictate billions of dollars being raised in all these different governments from a very small subset. So I am a supporter, very much so, of the 2/3 kind of cutoff to make that threshold higher. But expect that, again, to be a part of this debate of if you're shifting the burden of where tax dollars come from and then removing the ability for a local population to seek other funding if they decide they want to invest in whatever it may be, building a new building or whatever, there's going to be a lot of tension around that. So I like having I'm for the 2/3 threshold, but what I'm saying is I can clearly see the other side of that argument
Right.
that's going to come and say, hey, you know, if it's low turnout, that's because people didn't show up. That's on them. You're supposed to be a good citizen and go and show up for the election. I know that that's exceedingly difficult because people just have fatigue. They're like, I went to the presidential election. Why do I have to do this other one, right? And so that's kind of the struggle. But that I think is why I thought this was so interesting to talk about. Now, let me just make sure I say, though, what is not in this plan, and I thought was the best point the governor made, and I'm going to say maybe lead with this, was around what I would say was point number 4, which is create appraisal predictability, cap appraisal growth. So here are kind of the hard numbers the governor gave in the speech. Was his agenda with this is to cap appraisal growth at 3%. That number is currently 10%, as far too many Texans are painfully aware. And you compound 10% over a number of years, and you get the runaway out of control situation that a lot of people are dealing with. So lower that to 3%. And then here was the best idea, I thought: move appraisals to every 5 years instead of every year. So my recommendation, now that the governor asked me, of like, what do you lead with? Lead with the moving appraisals from every year to 5 years, because there is going to be universal elation at that change in policy, because the annual whiplash of the absurdity of these and by the way, homes are starting to come down now in the market a little bit. You think these they're so quick to raise them. You think they're going to come back the other way? And so you're going to have all this constant debate. You have to take time out of your schedule to go down to the county, building.
Contest it, yeah.
And contest.
Although you can do it on the phone now. That's how I've contested it lately.
So still your time.
Still time.
I think I would add that to the plan here.
Yeah.
Because let me tell you, everybody was clapping and hooping and hollering.
I would imagine.
When he announced that at this event, I'm like, this is a clear policy win. It's a great idea. And I think this is going to really color if LAF's election cycle was all about the school choice and education savings account debate, I
Property
think
taxes.
these 5 points are going to be kind of the critical thing that colors the discussion, at least at the state level. This isn't so much a federal issue, but at the state level. And many House representatives have already signed on to this. And so I think there were 8 reps at the event last night, and we're all, supporters of this initiative. So there is a groundswell rallying around kind of this framework. And I fundamentally think that this is the central, our local economy and affordability crisis hinges on addressing this. So I think this is the right thing to focus on. And first and foremost, I want to see the 5-year appraisal thing passed, because I think that is a clear and enormous improvement. So expect to hear a lot more from the governor, and probably more, televised speeches and whatnot. But since I was in the room last night, I could report a couple of details that maybe weren't in the 5 points that have come out. So we'll hope to continue to cover that and have that political debate play out here in Texas. That is the policy update, and that is the conclusion of the Run a Show for this show.